Hello and welcome to another video from the Tradelands Nation. Today's video is going to take us outside the game of Tradelands and instead focus on a topic that has been very important to our group, one which has been on our to-do list for some time now, and that is try and tackle the most frequently asked question of our group: how does our price guide actually work? For those who don't know, our group maintains a price guide as a part of our stock exchange that attempts to measure the various factors of the economy in Tradelands. It was never our intention to hide this from the community. It was just such a complicated topic, and it was also a point of pride within our group, and we just didn't think that we could do it justice. But today we're going to attempt to do so, and if we don't succeed at answering many of the questions that you have on what we're doing, we can always do a follow-up video to provide additional clarity if that will help. We are going to break our explanation into three parts. First, we are going to show the basics of how the prices are generated. Then we are going to talk about how all of this is integrated into the larger stock exchange. Third, we are going to show two common market trends that we see experienced players using in-game, and provide some guidance on how you can use our data to do the same thing as well. First, let's start by explaining how the price guide actually works. On the screen, you will see two boxes. On the left, we are going to make this into a chart. It is going to be a time-boxed chart. It has a beginning and an end on the left and right side. We will call this the indexed time period, or simply the period. What you see on the actual price guide are the prices at the end of a period each time we update it. On the right, we will be keeping a log of all the calculations that we are making while we are trying to determine the prices for each item. That way, you can get a sense of how the calculations are working behind the scenes. On the actual price guide, these are done in real time and with thousands of data points being processed all at the same time. In today's example, we are going to significantly simplify this just for the sake of understanding. Okay, let's get started using iron as an example. In this example, there are two players, a buyer and a seller. The buyer says in the in-game chat that he is going to buy 10 pieces of iron for 150 per piece. The first thing we have to do is calculate the market capitalization, or the total amount of money that he's planning on spending. That's a pretty straightforward calculation in this case. 10 pieces times 150 per piece is 1,500 doubloons. So we will put that on our chart here, an orange dot to indicate a buy request. Then let's say that there is a seller and he's willing to sell 10 iron at 200 per piece, and he puts this into the chat. Using the same calculation as before, we first find the market capitalization. 10 times 200 comes to 2,000 doubloons overall. Now we're going to put that in our chart in green to represent a sell request. Now we have to find the starting point to figure out the beginning data point for this period, which will be represented by this blue dot. This is going to be our price index. This is our item price, and it is what would appear on the price guide. To get a starting price, we have to find the total value of all requests on the market and divide them among the various pieces on the market. If you added all of these buy and sell requests together, which is 1,500 doubloons plus 2,000 doubloons, we come to a total of 3,500 doubloons on the market. Then we divide by the number of pieces, which is 20. That gives you a starting price point of 175 doubloons per piece. Now let's assume that both of these players are on the same server and they negotiate with one another. In this example, the buyer is desperate and is therefore willing to go higher on price. Ultimately, the two players settle on an agreed price of 180 per piece. But because the price is higher than the buyer expected, he only agrees to purchase 5 pieces of iron instead of his original request of 10, because he doesn't have enough cash on hand. That means a couple of things will happen to our price point. First, because they are being purchased from the existing requests on the market and not something new that we are adding, we start by removing 5 items from the seller's total and 5 items from the buyer's total. That's because they are no longer being bought and sold at this price point. This nets a total removal of 1,750 doubloons from the market. Next, we are going to re-add these to the market at the agreed upon 180 per piece price point. This nets us an addition of 1,800 doubloons to the market. In other words, this transaction is adding 250 doubloons to the market, because these 5 pieces of iron went up in overall value. But now we have to calculate the impact this has on our total price index. If you do the math, which is taking the total value of all items on the market and dividing it by the total transactions, you'll notice that the new point has moved up to 177.5 doubloons. At this point, it means the price point for iron in this period has moved up $2.50 from its starting point. There's an important phenomenon that just happened here, by the way, and it's called market influence. In short, items that are bought and sold closer to their true price point have a greater influence than items that are listed far above or far below the true price point for that item. If you did the math we just did, you'll see that there was actually a 4-point multiplier effect that was applied to that single transaction. That's because the items that were sold were removed from their previous price point and then added back at their new price point. This is something that we will mention later in this video when we talk about market strategy, but to summarize, as a player, when you price items competitively, it has a higher impact on market prices than when you put poorly priced items on the market that are priced either too high or too low. But while this had a significant impact on our price point, effectively moving it up 2.5 points, it comes at a cost. It means that these items will no longer be able to influence the market going forward. That's because the act of completing the transaction means they are no longer for sale. In order to put them back on the market, the buyer would have to become a seller, and the item would have to show up as a new item rather than an existing one. On the other hand, items that were not sold, in this case, the 5 that were being sold and the 5 that were being bought, will continue to influence future prices. This will be true until something changes, such as the seller pulling the item from the market, adjusting to a lower price point, such as offering it as a discount, or it is sold to somebody else. So let's look at what happens next. Let's say that the seller has been emboldened by the recent transaction. After all, he was the dominant in that negotiation. The dominant is the one who is viewed as having control of the negotiation process. It's usually the one who receives the first counteroffer and gets to provide the go, no-go decision. In our example, he only went down 20 points, whereas the buyer had to move up 30 points to complete this transaction. That means the market in this example is probably a seller's market right now. The seller decides to list 20 new pieces of iron at 190 per piece. The lower price point is an attempt to improve his market influence by moving closer to the real price point on the market. In doing so, he would be attempting to become the price setter for this market. At the same time, a second buyer comes into the market, wanting to purchase 10 iron, this time at 160 per piece, which represents a continuation of the same demand for iron. If you do this math, these two new requests are setting an average price of 180 per piece, which is in line with the previous transaction. However, in this case, there are 30 new items being tracked in this index. And if you do that math, it means the average price for iron sits at 178.75. Now, some of you probably just heard me say that and say, wait a minute, those new items come at an average of 180 per piece. So how did you come up with 178.75? That's because the buy and sell prices still have items on the market from the previous price point. So we have to add the items to the existing pool. That math is 1,750 items from the first round, plus the new addition of 5,400 doubloons. And there are now 40 requests being tracked, 15 buy requests and 25 sell requests, for a total of 178.75. Now let's say that the new buyers and sellers couldn't make an agreement, but we want to post the prices, so we're going to go ahead and close out this period. Now we have to aggregate the two transaction types to figure out where the true price point for iron ended up during this period. In this period, there were 7,150 doubloons in items on the market, and there were completed transactions worth 1,800 doubloons. That means the index price, the one which would appear on the price guide, is 179 doubloons. That's it, really. That's the whole price guide, at a high level at least, and it was a very short example. In a small enclosed time frame like this, say maybe the time that you would log into the game for 15 minutes and maybe do 2 transactions and then log off, it's a lot easier to just go on instinct than to use a complicated formula that's running behind the scenes like the one we just showed you. But where it gets interesting is when you start doing this kind of calculation over hours, days, months, and even years, with hundreds to thousands of transactions being tracked, and then it starts to paint a picture, one that would actually look like this. As of recording this video, this is the current price index of iron, which represents the market over the past few days. There are multiple sellers and transactions that are occurring per hour. In Tradelands, iron is considered a high volume index, meaning that there are thousands of transactions that make up a single period. In fact, for those who are curious, this chart was made using 25,000 data points to come to a current price point of 163.85. So to summarize all this, the price guide page is taking the requested prices from buyers and sellers, the negotiated transaction prices, as well as the volume of requests that are made, and it creates a price index from all of that data. It's an actual number, it's not a range, and it will fluctuate based on how players are buying and selling things in-game. And it also means that players control the prices that are shown on the price guide. Prices that are more likely to generate an actual sale typically have a higher weight in this economic formula. Now let's look at how the data is displayed on the website, and hopefully with this understanding it will start to make some sense. Now we've already beat iron to death, so I'm going to change our focus and we're going to look at the wood market this time. This is a hot time for wood right now. Especially as I'm recording this, the April and May release is just around the corner and we just had the April Fool's release. The first column of data on this page will be the price per piece. This follows the formula that we just reviewed. The price shown here is the one used to calculate the state of the primary stock indexes, which we'll get to later in this video. The next column is the market capitalization, or simply market cap. Remember when we were calculating the period ending price? We summed up the total value of all the pieces and then we divided them. The market cap is effectively that total value of all those pieces combined. In essence, it tells you how much money you would need to spend or the volume of materials you need to sell in order to actually be able to influence this market. Some of these items have dashes in them. That means that the data on this, when it was last updated, the market was experiencing low demand. Look at red oak as an example. If you were using this guide and saw a dash in market cap and then looked at your inventory and saw that you were sitting on a stockpile of it, it means you might be able to take the opportunity to start a price correction or even try to corner this market. The final column is the updated date. The period indexes are only updated when something significant happens. Some items are notoriously low in volume and so they don't change very much. Vouchers and tokens are the most common example, where people will typically get them and make them available only after somebody asks for them, rather than trying to maintain a stockpile of them. It's important to note that both the price of the items as well as the capitalization are displayed as of a point in time, and that is the date that is listed on this page. A common issue is that prices can become stale, meaning they aren't being updated. Stale items can occur for a variety of reasons, but the most common is that they may not actually be on the market anymore, or that the prices are being used based on an old data set that don't include inflation or other market factors. So when using the price guide to price your own items, make sure you are aware of that and always checking the last updated date. And there you have it. That's really the basics of the price guide. Pretty simple, right? But now let's go beyond just the price guide and let's talk about the bigger picture. This was only one small part of a larger one, and it's called the stock exchange. You see, the price guide was actually a secondary component. It was made after we had built the stock exchange. The stock exchange has three interlinked components: the price guide or price indexes, which is what we just covered, the real-time index, and the bond market. Since we already did the price guide, let's table that one and let's actually start with the bond market. The bond market is a measurement of stability in the market. Let's use iron again as our example. It's a high volume item and it usually has fairly predictable patterns because it's a cornerstone item. On the bond market page, I could sort through all these, but instead I'm just going to go to the search box and type in iron. And here it is. The first column is interest rate, which is usually updated once a month on the website. This comes from a component of the market called volatility. The interest rate is a measure of how much of a buffer you would need in order to secure an investment. For example, if we were operating a bank in Tradelands and I was giving a loan for iron, it means the effective interest rate I would charge for that loan would be around 5% based on the data on the page. But I'm looking at this from the context of an investor, and that means players are getting around 5% profit or loss on every transaction of iron. That's about what I would expect for a high volume market like this. The next column is trend. Trend tells me if prices are becoming more or less stable based on how players are trading in game. A red arrow means prices are destabilizing and becoming more volatile, whereas a green arrow means players are stabilizing their price points and they are becoming more consistent. No arrow means they are staying about the same as they were before, or that the volume of this item is too low to be reliable. Trend is a measure of how much risk that you want to take in that market. In iron's case, which has no arrow next to it as of recording this video, it means it's staying pretty consistent. But if I invested in cast iron, on the other hand, where there is a red arrow, it means that I'm investing in a market that is becoming riskier. So when you're making decisions, it depends on how much risk you want to take when you're making your investment. The final column on here is bond rating. If you've ever invested in real-life bonds, you know that investments under a B rating are usually classified as junk bonds, and you aren't likely to get your money back if you did put money into these. It works the same here as well. If you want to make a safe purchase, aim for higher ratings. If you are a risk taker and want to shoot for the moon or something like that, then lower ratings are the markets where you want to play. This page is one of the most complicated in the whole stock exchange. It's summarizing a lot of data, the most important of which is something called the Volatility Index. The Volatility Index is a measure of all price points for an item during the period that it's being tracked. It also measures any changes to those items that are made, as well as if sellers are attempting a known strategy such as buying up large quantities of items in order to resell them later. This is then charted across all of the individual items to produce a value index, which is often referred to as the trading price. If you go back to the explanation on the price guide, it would be the same thing as if you had used the price index but without the influence of all the completed transactions included. This is what a volatility index looks like. The blue line represents that trading price that I had just mentioned. This chart shown on the screen represents items over 1 week of in-game trading, give or take an hour since I pulled this report about 30 minutes ago. And in case you are curious, there are actually 88 data points on this chart. This is Emerald. It's an example of a stable price point. All of the prices, both the buy and sell points, are all reliably coming in between 1,000 and 1,400 per piece, and there is very little deviation from this range. If this were to be used in the bond market, this graph actually shows an interest rate of 11.54%. The page on the website represents the rating over a month, not just a week though, and that's why on the site I currently see 9.54%. This is a sign that this week Emerald is slightly less stable, 2% less stable in fact, which isn't a major concern for an item like Emerald. If you are curious to know more about the inner workings of this though, let us know and we can always make a follow-up video and walk you through this in more detail. I mean, this is a very complicated topic, which is why the stock exchange attempts to simplify it. Now let's take a look at an unstable price point. This is pine, a notoriously unstable item ever since pine decking was removed from the game. This is showing the same time period as the last graph, but there are 111 data points in that same time period. Notice the sharper ups and downs, meaning players are buying and selling at a wider price point. I've been looking at these charts for years and analyzing them, and I see this almost immediately, so I'm going to tell you all as well. This item is showing clear signs that it will be trending towards a lower price point. In my mind's eye, I can see a gradual downward trend in the volatility, but I can also see that the volatility trend, as it's going down, is also coming closer together. The last 2 days have seen some stability returning, meaning it's probably getting closer to its true price point as it decreases. That means that this item wants to stabilize at a lower price point than where it started. It's just a matter of if players will allow it to do so. In other words, if I was asked to write up a review on this item, I'd say it's likely to stay at a reduced price point as long as someone doesn't come in and try to manipulate it. But price movements like this and the spikes between the high and low price points are really the sign of stability. This chart shows a 24.72% interest rate if you were curious. And it also shows that it is unstable, but stabilizing as it gets lower. Finally, just for the sake of completeness, this is an example of a volatile market. This is universal carronades. Items with prices that are based on item prefixes almost all look like this. There are 110 transactions in this group, and it shows an interest rate of 55%, which is essentially meaning you are nuts if you are loaning someone money to buy one of these, because chances are they aren't planning on paying you back. But I'm getting off topic. Instead of requiring players to come up with all this knowledge, which, I've gained because I've been doing it for so long, we're trying to simplify this into a single page to hopefully make investment decisions easier for you, the player. After the bond market is the real-time indexes, which attempts to visualize the data points shown on both the price guide and the bond market on a series of charts. Rather than show specific data points, they are showing the ranges over time. Let's continue with our theme of checking iron prices. On the index page, I see a list of items that have accumulated a significant number of transactions during the last period. If your item isn't listed, it's possible that we still have the data, but we didn't display it for page loading reasons, but we can still post it for you if you let us know what you need. Iron is usually always on this chart because it is a high volume item, so I locate it in the list and see a chart specifically showing its prices. The shaded area behind the line shows the range in which most transactions are occurring. If you were looking for a buy-sell range, the kind that you might see on other price guides, this is where that kind of guide would exist for this specific time period. Know that this changes over time based on the actual transactions. So what it shows today may be different in 2 weeks. We typically try to refresh these charts bi-weekly, but this is a very data-intensive process, so we sometimes miss our deadlines. The line shows the price point is changing over time. Each spot on the line is the price point you would have seen had you visited the website and gone to the price guide page on that day. As you can see in this example, iron prices are currently trending up again, mostly due to a recent influx of requests to buy iron because of the April Fool's release, which just happened, and they had multiple iron-heavy ships that you could purchase. And if you understand that, then it brings us back to the price guide, which we've already discussed, but hopefully now you can see how it all interconnects with the rest of the stock exchange. The index is the current price as of the point of time in the last updated date. The real-time index shows us how it is trending, and the bond market tells you by how much is it trending. All of these items are combined together to form the primary indexes, which give a holistic view of how the economy of Tradelands is performing. It paints a picture of not only how the economy of Tradelands is doing today, but what we can expect it to do in the future as well. Finally, let's talk about market strategy, putting all of this to use so you, the player, can make the most out of your trades. The first is influence. Especially if you are a bulk trader or do a lot of glowy transactions, influence is one of the most important factors, and there are 2 common ways that you can influence the market. First, remember before when we said the closer you are to the item's current price, there is a multiplier to the amount of impact you'll have? This is what the distribution actually looks like in a data model. As a trader, your goal is to figure out how far you can push this price point without going so far that someone else either undercuts you or you lose the interest in your items from other players. Your best tool for this approach is the bond market, and it will tell you what your ranges for buying and selling are in order for you to remain competitive. The second method is through cornering the market. This is typically done by players who will invest in buying up any items below their desired price point and maintain a high enough inventory of those items to sell to other players so that they cannot undercut you. This can be incredibly expensive to pull off, and the market cap metric gives you the best indicator of how prepared you need to be in order to pull this off. The next phenomenon is called price manipulation. This involves components of market influence, which we just mentioned, as well as volatility, which we discussed in the bond market section, where the ultimate goal is to move a price index in a desired direction. For this, I'm going to actually show you a real example. At the end of December last year, there was an item called the Goofy Musket. It doesn't sell very well. Around the time when the winter event went live, players who were selling this item, usually around 20,000 per piece, suddenly changed their displays to offer or withdrew it from the displays entirely. What that effectively did was remove them from the market, and they were replaced with newer items from the new crates that were released during the winter event. but a handful of extremely overpriced Goofy muskets remained on the market, and quietly, the price went from an average of 20,000 per musket to 1.2 million per musket. That sat unnoticed for a month and a half, accumulating market influence until finally players took notice and started relisting their items at their former price points. Once players had noticed and relisted their items, this caused the capitalization to go back up, and as a result, the price had been in a gradual freefall ever since. This is evident on the real-time index as well as the valuation report, which shows the trading price next to another metric called the index price. The orange line is the trading price, which is just the buy and sell amounts without the transactions included. The purple line is the index that you would see on the price guide. In cases like this, the trading price is probably more accurate than the index price. But in normal circumstances, the trading price is far too easy to manipulate. I mean, you can list one piece of iron for 1 million doubloons and it will impact the trading price, but not the index price. And that's why the index price is what we typically use as our key measurement and not the trading price. The Goofy musket is one of the rare cases where the opposite is true. As of today, 63 Goofy muskets are now back on the market. The blip in the purple line is one of them being sold for a significant reduction in price. But this is an example of what long-term price influence can do to a price point. In this example, it represents a seller effectively cornering the market and setting their price to whatever they want. Unfortunately, it was due to negligence rather than an actual attempt to move prices. But it does demonstrate the power you can have if you are a diligent trader and very aware of what prices look like in the market. And while this represents an extreme example, there are less prominent examples. These include sand, spruce, and even skelestone, which have all seen this tactic taken and used effectively and meaningfully, meaning players are doing it on purpose. So it's not just extreme examples, it happens on common markets as well. The usual guidance from our group is to watch the rise and fall of the market cap, as it's a good indicator of who's actually watching this market and how much you need in order to manipulate things yourself. And then you can use the bond market to determine how much you want to try and influence that market price each time you try it. But to close out the Goofy musket story, it's likely that this downward trend will continue to fall until it has ultimately hit the trading price, after which it will start to stabilize. For the record, the trading price for a Goofy musket right now is 49,343 doubloons as of recording this video, and its capitalization is just 2% of where it was in 2022. If you ever look at a real-time index and see a trend that has a long, straight slope like this, it's likely that the market is having a similar phenomenon. Be aware of this, especially if you're using this price guide to make prices for your own items. So there you have it, a quick overview of the price guide and how it works. I'll end this video by answering one additional question, and that is, which price guide should I use? And the answer is all of them. Every price guide I've seen in game has come from different angles and different sources. Just as ours is based on the active buying and selling of items in game by you, the players, there are others out there that are just based on what an experienced trader's prices might be, or in some cases, what prices were in years past. But if I had to give you an answer though, I'd say you need to use the one that provides data that you trust the most. Our guide exists because some of us felt like the existing guides at the time were too easily manipulated, or that there wasn't clear enough explanation as to why the prices were what they were. And I know now exactly where my data is coming from, so I personally am going to use that as my primary choice. But the one you choose is really up to you. And in the end, what we really want you to use is whatever data best suits your needs. Because the most important factor in all of this is we want you to trust your prices so that we see you trading those items and at those prices in game. So the economy of Tradelands and its players can all benefit equally. So with that, thank you all for watching, and I hope to see you all trading in game.